Okay, so in this video, we'll talk about identifying entry points. Now, I do this in very much the same way as I do identify my targets, but of course, we are looking to the other side of it. So we're actually looking to get in line with the trend rather than targeting somewhere a bit further away from price. So I'm going to show a couple of examples here. We're going to run with the market as it is here on GBP AUD still. So we've just actually followed on from the previous video where we went and fulfilled those targets. Now, what I'll be looking to do here is actually enter some trades to trade in line with what the market is presenting to me now. So first off, I'm just going to identify some targets in the same manner that we just spoke about. Now, I am actually pointing to the downside here with these targets. And the reason is, if you look at the current structure, okay, we form these higher highs, higher low, higher high. We've come down, we've actually formed this lower low. Okay, so now I'm quite interested in counter trend bringing this down. Now we don't have any levels of significance met yet, at least until we tap into 8250 there, 1.8250. So I do believe we can probably bring this market down into 1.8250 to fulfill that place there. Now I'm focusing on some lower zones as well, and we'll just see how price actually reacts. Okay, so right, I'm quite interested in this region here being a key level. We'll just actually keep an eye on that level as well. So, right, looking at this then, I am going to be using the same things that I normally use, okay? That is going to be supply and demand, key levels, and the price imbalances, and of course, any liquidity that we might see. So, as it stands right now, we've seen these higher highs, higher lows turn into lower highs and lower lows. So, I believe that with a price imbalance left open, and what I mean by that is no level of significance has yet been met, there is liquidity that we need to go pass through into at least this level before the upside continues. Then I will be targeting a push down before I actually go and target a push up. So my target for this trade will be 1.8250 using the principles that we spoke about before. Now that's a supply zone paired with a nice key level. Entry wise, do I think we are ready to enter right now? No, I do not. Okay, we've came just shy of the 1.86750 level. So obviously being a 750 level is quite a nice indication that it could be a flip point, but we did come one pip shy of it. Now, we can't be too picky. However, it is good to see precision on those levels at least. And what really drives me away on this one is this whole manipulation point, the supply zone that we have right here in the top of this movement. Okay. So, to be not too picky, I'm going to actually embody this entire green candle as the reversal point for that supply zone, and that's the area that I'm going to focus on for my downside move. Now it's as simple as this. Okay, if this market tanks to the target from here, we miss the move, and it is that simple. We are not trade chasers. Trades always come around. Every single week we will have a new opportunity. It is as simple as that. The markets are always flowing, the markets are always moving. We never need to chase a trade to the point that we're going to enter right now. We're just going to simply wait. If our conditions are met, we will enter, and if they are not, we won't. That is as simple as trading is. Okay, so what am I looking for then? I'm looking for price to react into this zone. I would like to see a reaction into this zone. Stop loss over the high there, so we're looking around a 70 pips stop loss. That's cool. And our profit target is going to take us at least into that 1.82500 level. So, as not to push it, I think I will actually target 1.82750. Okay, if we can target 1.82750, that is just shy of the zone. If we push into 8250, perfect. So, what we want to see then is price to come up, react into this zone, and then come down lower. So, if we just allow price to do its thing, from here, we can actually see whether or not we're going to get triggered into the movement or whether or not the trade is going to leave without us. So one important thing to note is as the market moves down without us, it's important to never get too impatient. Okay, you've just seen a great reaction there. It's important never to get impatient, I was about to say, because if we are to sell into this out of a panic, thinking, no, the market's leaving without us, we're going to miss this opportunity, we need to get in now, you would have got wiped out because you would have put your stop above here, and look at that, you just got wiped out. And now that is why the market does things like this. It entices sellers and then wipes them out by focusing instead on, okay, first of all, the price imbalance. We didn't actually go trade into the zone just there. The supply zone And if we focus on that right there, the 1.7250 key level. So that is a more favorable key level. You can see we reacted into that and rolled over quickly. Now let's see if the market continues in our favor. So that's actually how we're going to identify price targets, okay? With absolute patience. We do not need to rush into any movements. We don't need to chase the market. We can simply plot a zone, supply zone, demand zone if we're trading it the other way, focus on the overall structure around, some key levels that we are likely to tap into, and then just await that and see if that's actually going to happen, see if we can get those zones fulfilled. Now, I suppose here the major key level that it traded into was the 1.871 level, right? 1.70, sorry, would be the one that we really want to see met. And it was. So that area there, that 25 pip range was where we traded into. And you can see that actually highlights the importance of this imbalance, okay? We have here supply zone. We know that price is most likely going to trade into that supply zone before coming down. So we won't rush. We'll simply wait with our orders set. We're ready to actually execute on the lower time frames. And then we can look to bring the market down if and when and only if this market is met. Okay? No trade chasing, no early entering, no fear of missing out. We spoke about this in the psychology series. That is only going to leave you burned. For now, just wait. That's what we do. And if we get triggered, we get into the zone of interest, then we sell. If we don't, then we just sit on the sidelines. So there's one nice trade entry. We saw price react down into the zone. And now what we could actually be doing then, because we know we're in an overall uptrend, is potentially focus on taking this market back to the upside. Now, I'm going to say I do want to see the 1.8250 level met before we go for any trade. So if I miss opportunity, then that is no worries. Okay, it looks like we could potentially be shifting trend structure here. Now, if we look at this, we've actually had higher high. I think until we actually surpass this high, I wouldn't be comfortable buying just yet. Right in the middle of this range. Now, if we could move lower, fulfill this zone, I may actually consider some form of buying opportunities. However, right now, the market is not too favorable for that. See how we haven't made any new higher highs yet. We are still just making these lower highs. Until we were to make a higher high, sorry, I wouldn't be too confident in actually buying. Now, if we could go surpass this little structure point here, that may provide me with some form of interest to buy. See how we formed two equal highs here? If we can push over there and close with strong momentum above, then potentially, now that we've reacted from this zone, I will consider buying that. So let's actually see. Okay, that makes it like a triple equal high. So if we could push over there, it's probably going to provide us with... Okay. Don't speak too soon. The market can do anything, right? So I do have my eyes, now that we've pushed through this zone quite low, I've actually got my eyes on this level down here. I'm a little bit less confident about this support point now. Right, so market's trading into 1.8100. Let's just clear this zone. We don't need to worry about that anymore. Clear that level, as we don't really need to worry about that. Now, when we do supply and demand zones, we look at fresh zones, okay? We mentioned that. So now that this zone is not fresh, it's not going to be too much of a big focus for me. I know I'm still looking to buy the market, and I want to do so from down here. This zone here, 1.80750. And I do also have that 1.81 level plotted because it is a key level, and it could actually be somewhere that forms a pretty healthy reaction. So let's actually see what the market can provide. Now, targets wise, back into the top of the range is going to be a clear target for myself if we can go and get back up there. So I will be focusing now towards 1.880, right into the top of the consolidation. So let's see what the market can provide in and around this retest area. Now, my favorable entry would take us into 1.8750. However, being the 1.81 rounded key level, we must be ready for reactions from here as well. So now it comes down to this structure, okay? If we could go and surpass that current structure high point, we could very well begin identifying an entry point. Okay, I like that. Now, if we can get a retracement, right, a bullish engulfing off of this previous structure high point here, which if we look at that, pairs up nicely with the 1.820 key level, right? Break, retest, push up, push back down, bullish engulfing. Now, I'm interested in actually buying this market from this point. I will actually be keeping the stop clear of this low because we do need to in case we get a tap back down, being the key level right there. But we are now over the 1.82250 level, and I am ready to go in for a buy position. So let's do this. Stop loss, we will keep clear of that previous low, looking around 80 pips on this stop loss. Profit target, fly it straight into there if we can. And let's actually see how the market plays out. So great takeoff so far. This will be the point in which we actually break even the trade with a stop loss to entry point to cut the risk out of it. Now, why did we actually go for this movement? We saw a reaction from 1.8100. We saw the price then come up and form a resistance barrier over and over and over again. That resistance barrier was the 1.8200 key level. Now, when that level was surpassed, we saw a rollover, a push down, and a retest. I wasn't quite happy buying there because we still, of course, have this resistance point still in play. Now, after seeing a push up over those levels and a push back down, a bullish engulfing then shows us that this downside momentum is being completely wiped out. So using the market flow aspects with the individual candlestick aspects and market structure primarily, we managed to get a nice entry off there. So what I'll be looking at now is for price to potentially come back down. The 1.30 key level is a very prominent level there. See how we have this reaction and then this reaction, and we've actually taken that high out. Potentially this to act as some level of support. So if we do get wicked out, I will be looking for an entry anywhere over the 1.30 level. So keeping in line with those key levels as we do. Probably going to see that level tapped. There we go. We've seen a tap. Okay, and bullish momentum. Now this could be bullish momentum engulfing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 previous 4-hour candles of price action. Now I would go and say that this could be an opportunity as well. So this is actually a good example here of scaling in. Now we will talk about this in a bonus chapter. This is a very more advanced way to trade. But basically, as we know, from this first movement, we are now break even, right? We've got no risk on this movement. So when this secondary opportunity comes around, a bullish engulfing off a key level, perfect reaction, which of course is also this supply now turned demand zone and previous precision level. We could actually go and scale a new entry. So we can add, say we have 2% risk on this movement. This is risk-free, okay? We now have no risk on that move. So that means we can actually add another 2%. And what this means is we could make double the profit potential, but with only that original 2% risk, right? Because this one's covered. If this hits stop loss, we lose 2%. But if we hit break even on this one, we're out. So our max risk remains 2%, but our max profit potential is now doubled. So that's scaling in, but we will talk about that in the future in a bonus advanced chapter. So for now, just focusing on the entry that we just got there, you can see why we brought that second one. Okay, that would be the more conservative entry. That first entry we took was quite aggressive. We were still quite low in the trend. However, the precise reaction and takeout of 2 resistance points does give us potential, especially when we see this bearish downside wiped out by a bullish engulfing candle. That right there is a nice viable place to enter. But this move, after seeing a big wipeout of the overall trend structure and a pushback down to retest a key level, and then a bullish engulfing of 12 previous candles, this entry is an absolute no-brainer. You'd kind of have to be stupid not to enter there with the education that I'm teaching you now. So that would be the more conservative entry. Now, if this one makes you feel nervous, that is fine. It's all a learning curve, and you may actually just wait for the overall larger trend structure to give way. Okay. Now, I'll agree myself, this move was quite aggressive when compared to this one. However, you do have to remember we are on the 4-hour chart, and this is not structure to be taken lightly. All of the structure being taken out on the 4-hour charts is quite a large movement to consider. Right, so riding the price up now. I mean, generally, we'd probably be taking profits along the way, but we are not focusing on targets for this video. We're focusing on entries. And bam, there we go. Profit targets fulfilled. So there we go. That was a few entries. I showed you the selling entry where we got the lower lows, lower high supply zone tap to provide a sell trade down into this point. And then we've had two buying opportunities, two scaled buy opportunities, one from down here and one from here. Now this one, 6.9 risk reward. That means for every dollar you risk, you're making $6.9. So if you risked $100 on this move, you've just made $690. If you risk $200 on this move, you're looking at around $1,400. This move, 5.5, that is $5.5 gain for every $1 risk. $200 risk on there is $1,100 profit. So for $400 total combined risk, well, $200 because we were already break even by this point, we could have made just $2,500 from two trades. 2% risk, $200 risk, sorry, $2,500 gain. Okay, so that is the power of using all of the levels and everything that I've just presented to you. Now, that is not even to mention the short trade we got out of this zone. And I've got to say, this is the importance of being precise, being patient with your trading entries. If you're going to dive into every single trade, if you're going to early enter like these, or you're going to gamble at buying this single bullish engulfing candle here, well, then you're probably going to take fair few losses compared to being patient, being conservative, and waiting for structure to suggest that the entries are right. So hopefully that taught you there some very, very valuable information. And I do hope that you are learning now and everything's coming together. Now, we've spoken about identifying targets. We've just now spoken about identifying entries. Let's just finalize it with the checklist once again. We're looking for key levels, supply and demand zones, and price imbalances. And if a price imbalance is not filled, we don't go for the trade. If a key level is not yet tapped, we don't go for the trade. If we don't have a confirmation candle like bullish engulfing or a quick shift in momentum, or an inside bar breakout, we don't go for the trade. It's as simple as that, okay? But in all of these examples, we did. In this instance, we had a tap into supply zone. We had a rollover, nice bearish engulfing candle, which could have triggered us in. However, we did actually go for a limit order on that one, which was a sell limit. In this example, the first one, what did we see? Push down, bullish engulfing, entry, okay? Change in structure, bullish engulfing, that was our trigger. The next one, an even bigger change in structure and a mega bullish engulfing there, and that provided another great entry. So that is also, may I say, a great proven point of why I do like the engulfing candle so much. Engulfing, in my opinion, is the biggest, best, and most effective candlestick pattern to trade. So yeah, that's a great way to actually see that in motion. So thanks for watching this video. I'm going to see you in the next one where we're going to talk about something quite interesting, something a little bit different, which is going to be identifying your stop loss placement. So you saw in these positions, I had the stop losses and the take profits marked. And you saw I actually, whilst placing them, talked about the logical places to put the stop loss. Now that's what we're going to talk about in the next video, a very important factor in building your accuracy as a trader.